$850 billion. That is not just a number on a spreadsheet. That is a loaded weapon pointed directly at your bank account. As of this morning, the finger on the trigger belongs to China. For years, people said a total collapse of the bond market was just a conspiracy theory. They said it was impossible. But right now, we are watching it move from impossible to inevitable. This is a geopolitical divorce between the world's two biggest superpowers, and it is going to force a price reset on every single thing you own. The 30-year mortgage rate is about to detach from reality. It is going to skyrocket, and there is nothing the Federal Reserve can do to stop it. If you thought 7% interest rates were painful, you are not ready for what happens when the biggest lender on the planet decides to walk away from the table. To really understand why this destroys your buying power, you have to look past the headlines. Most analysts only look at one number. They look at Chinese holdings of standard US Treasuries, which sit around $760 billion, but that is not the whole story. When you add in the debt of US agencies, massive entities like Fannie Mae and Freddie Mac, the real number is $850 billion. This is the leverage Beijing holds over the American economy. It is the nuclear option. For 2 decades, we had a deal. It was a symbiotic relationship. China sent us cheap goods, electronics, clothes, furniture. In exchange, we paid them in IOUs called treasury bonds. Then they did something very specific. They took those dollars and recycled them back into our debt market. They loaned the money right back to us. This kept our interest rates artificially low. It kept their currency cheap so they could export more. It was the greatest financial trade in history for the American shopper. It effectively subsidized our entire standard of living. But that trade is over. The trade war of 2026 broke the cycle. It turned a partner into an enemy. When the US put 60% tariffs on Chinese goods, we basically told them their dollars were no longer welcome here. So China did the logical thing. They stopped recycling those dollars into US debt. Instead, they started selling. The latest data confirms it. China is dumping US assets at the fastest pace we have seen since 2015. This is not an accident. This is not a random fluctuation. It is a strategic decision by a foreign government to de-dollarize its entire economy. They are selling US Treasuries, which are just paper promises, and using that cash to buy physical gold. They have been buying gold for 28 months in a row. That is a record. They are trading paper from a hostile government for a hard asset that has no risk. They saw what the US did to Russia's money in 2022, freezing their accounts overnight. China is ensuring that it cannot happen to them. But here is where it gets dangerous for you. The problem isn't that China is buying gold. The problem is that nobody else is buying the bonds China is selling. The US government runs on debt. We have a $2 trillion annual deficit. That means the government spends $2 trillion more than it makes in taxes every single year. To keep the lights on in Washington, we have to sell billions of dollars in new bonds every single week. It is like having a credit card bill that you pay off by opening a new credit card. In the past, China would show up to the auction and buy a huge chunk of that debt. They were the guaranteed buyer. Now, not only are they gone, but they are also dumping their old bonds onto the market. This creates a supply shock. Imagine a neighborhood where every single house goes up for sale on the same day, but there are 0 buyers. What happens to the prices of those houses? They crash. The bond market works the same way. There are now more bonds for sale than there are people who want to buy them. When the supply is higher than the demand, the price of the bond collapses. And here is the rule you need to memorize. In the bond market, price and yield are like a seesaw. When the price of the bond goes down, the interest rate goes up immediately. This is why you are seeing rates spike. Inflation might technically be cooling down, but the market knows the truth. There is no marginal buyer left. The Federal Reserve is doing quantitative tightening, which means they are selling bonds, not buying them. American banks are already full. They hold too much government debt and are sitting on massive losses. Japan is struggling to save its own currency, so they are selling US Treasuries too. That leaves the American investor, you, as the only one left to fund the government's spending spree. But to convince you to buy a 10-year bond, the government has to bribe you. They have to offer a much, much higher interest rate. This creates a crowding out effect. It forces yields higher across the entire economy. It impacts every loan, every credit card, and every car note. But the most direct impact is on your house. The 30-year fixed mortgage tracks the 10-year Treasury yield. If China's selling pushes that yield to 6%, mortgage rates mathematically have to hit 9%. That is the math, and it is inescapable. We are seeing something terrifying. A complete decoupling. The mortgage rate is divorcing the Federal Reserve. Think about what that means. We are taught that the Fed sits in a control room and steers the economy. That is a lie. The Fed only controls the short-term rates. The market controls the long-term rates. The Fed could hold a press conference tomorrow and cut rates to 0. But if China dumps $50 billion in bonds on the same afternoon, your mortgage rate will go up, not down. This neutralizes the Federal Reserve. It effectively breaks their ability to save the housing market. We are entering a new era. Economists call it fiscal dominance. In plain English, it means the size of the debt pile matters more than the interest rate policy. And make no mistake, this is war. But it is not fought with missiles or tanks. It is fought with math. The Chinese government knows exactly where we are weak. They know the American middle class is addicted to housing wealth. They know that real estate is the engine of our economy. By forcing our interest rates to stay high, they can engineer a Great Depression in the United States without ever firing a single shot. It is a form of asymmetric warfare. They are using our own debt addiction against us. The timing is not an accident. It lines up perfectly with the semiconductor sanctions. We told them they couldn't have our best computer chips. We cut off their access to NVIDIA technology. So they retaliated. It is a tit-for-tat exchange. You cut off our chips, we cut off your credit card. The difference is stark. China can survive without high-end video game graphics for a few years. The US economy cannot survive with 9% mortgage rates for even a few months. It would cause a total collapse. Look at the commercial real estate market. Office towers are already empty. They are teetering on the edge of bankruptcy because they cannot afford to refinance their loans. If foreign selling spikes rates again, that is the final nail in the coffin. We are talking about trillions of dollars of real estate value vanishing into thin air. The US Treasury is powerless to stop this. They are stuck in a trap. They have two choices, and both of them are terrible. Option A. They force the Fed to turn the money printer back on. They print trillions of new dollars to buy the bonds that China is selling. If they do that, inflation explodes, your grocery bill doubles. We would be destroying the value of the dollar just to bail out a foreign enemy. Option B. They do nothing. We suffer a deflationary depression that makes 2008 look like a picnic. This is the dilemma Beijing has created. Heads they win, tails you lose. You're probably looking at your own portfolio right now and wondering, if cash is trash and real estate is crashing, where do I actually put my money? I am going to share the specific defensive asset allocation you need to survive this in just a moment. But before you can protect your wealth, you have to understand the ghost in the machine. You need to know about the secret accounts in Europe. The data shows that China is hiding their tracks. They are using middlemen. They use custodian banks in Belgium and Luxembourg to mask how much they are actually selling. The official number says they hold $760 billion. The real number is likely much lower because they are dumping debt in secret. Every time the bond market rallies, they use it as a chance to get out. This puts a concrete ceiling on bond prices. That means there is a hard floor for interest rates. The days of 3% mortgages are gone. They are not coming back for a generation. We are reverting to the historic norm. For 40 years, America had a VIP pass to cheap money. That pass has been revoked. Now we have to pay full price. And you are the one paying the premium. You pay it in higher credit card interest. You pay for it in higher car loans. You are paying a geopolitical tax every single month, whether you realize it or not. The standard of living in America was built on cheap foreign money. That money is gone. We are watching 40 years of globalization unravel in 40 months. The bond vigilantes have returned. But this time, they are not investors worried about inflation. They are state actors. They are selling to inflict pain. And that pain is about to hit corporate America. Big companies borrowed free money in 2020, but those loans are coming due. They have to refinance. Imagine if your mortgage payment tripled overnight. That is what is happening to major corporations. They have to roll over their debt at yields 3 times higher than before. This will lead to bankruptcies. It will lead to mass layoffs. The stock market is ignoring this. The stock market is betting that the Fed will save the day. But the bond market knows the truth. The bond market knows the Fed is being held hostage by the sheer volume of debt hitting the system. We are watching a slow-motion train wreck in the plumbing of the financial system. There used to be a safety net called the reverse repo facility. It was a giant pool of cash that absorbed shocks. That pool is now empty. It is drained. There are no shock absorbers left on the car. If we hit a bump now, the axle snaps. We could see a flash crash in treasuries where yields spike massively in a single day. If that happens, it breaks the leverage in the derivatives market, and margin calls will trigger all over the globe. The entire system is fragile. It is leveraged to the hilt. And now it is under attack from the second largest player in the game. This is why you are seeing money move. The smart money, the billionaires, the family offices, they are running. They see the bond market cracking. They are getting out of the blast zone. They are moving into assets that cannot be printed. They are buying things that cannot be devalued by a computer in Washington. Gold, land, commodities. These are the only safe harbors left. For 40 years, financial advisors told you the same thing. They said put 60% of your money in stocks and 40% in bonds. They called it the 60-40 portfolio. That strategy is dead. It is buried. Why? Because bonds used to be your shield. If stocks went down, bonds went up. They protected you. But now, Bonds are not the shield, they are the sword. They are the source of the risk. They are the epicenter of the earthquake. You need to rethink everything. Holding a long-term U.S. government bond used to be risk-free. Now it is a gamble. You are betting on world peace. And if you look at the headlines from Taiwan or the South China Sea, peace is not what is happening. The $850 billion sell order is not a threat to the future. It is happening right now. The dollar is being strangled by the very nations that helped build it. But before I tell you exactly which 3 assets you need to own to survive this crash, you have to understand the mechanics of the explosion. You have to understand the plumbing. Usually financial plumbing is boring. Nobody cares about it until the toilet backs up and floods the house. Then it is the only thing that matters. Right now, a critical valve in the U.S. financial system has run dry. It is called the reverse repo facility. Think of the reverse repo like a giant emergency water tank. For the last 2 years, this tank was full. It held over $2 trillion of extra cash. It was a shock absorber. When the government needed to borrow money, it could dip into this tank. It allowed the US Treasury to sell trillions in new debt without breaking the market. It kept interest rates stable. It was a cushion. But as of this month, that cushion is gone. That $2 trillion, it has been spent. This means the easy money is gone forever. Now, every single dollar the government borrows has to come from somewhere else. It has to come directly out of the banking system. It has to come from your bank's reserves. This is the worst possible timing. It is the perfect storm. We are hitting a liquidity cliff at the same moment China is dumping $850 billion in bonds. Without that buffer, banks are scrambling for cash. This puts immense pressure on regional banks. You remember Silicon Valley Bank? You remember how fast it collapsed in 2023? That was just the trailer. Now we are watching the main attraction. We are watching unrealized losses spread like a virus. Here's how it works. Banks take your deposits and buy safe bonds. But when interest rates go up, the value of those old bonds goes down. It is simple math. According to the FDIC, American banks are currently sitting on over $600 billion in losses. That is $600 billion that is gone. Vaporized. But the banks rely on a loophole. As long as they don't sell the bonds, they don't have to admit they lost the money. They can pretend everything is fine. They can hide the losses on their balance sheet. But there is a catch. If you get scared and you go to the ATM to pull your money out, the bank has to pay you. To get the cash, they are forced to sell those bonds. And since the bonds are worth 40% less, they lock in the loss. They go bust. This is exactly what happened to Silicon Valley Bank. But now, the risk is everywhere, and China knows it. By selling their bonds, China is forcing rates higher. When rates go higher, the hole in the bank's balance sheet gets bigger. It is a deliberate strategy. They are attacking the capital base of the American banking system. Beijing knows that the banks are the Achilles heel of the U.S. superpower. If the banks are broke, they cannot lend money. If they cannot lend money to businesses, the economy stops. It grinds to a halt. And the Federal Reserve is trapped. They lost their magic wand. In 2023, they launched a rescue program called the Bank Term Funding Program. It saved the banks, but that program has expired. It is gone. This leaves the Fed with a binary choice. Option 1, let the banks fail. Let the ATMs stop working. Option 2, print trillions of dollars to cover the losses. If they choose option 2, they destroy the dollar. They rob your savings through inflation. Both options end in pain for the average American. But the attack isn't just happening in the bond market. It is happening in the energy market too. This is the part that should truly scare you. For 50 years, we had a deal with the world. It was called the petrodollar. If you wanted to buy oil anywhere in the world, you had to use US dollars. If France wanted oil from Saudi Arabia, France had to buy US dollars first. This created a permanent demand for our money. It forced the world to hold our currency. That era is ending. China is the world's biggest oil customer, and now they are paying for oil in yuan. They are using swap lines with Saudi Arabia. They are cutting side deals. It is a petro-yuan arrangement. They are bypassing the U.S. financial system entirely. They are cutting out the middleman, and the middleman is us. This reduces the global demand for dollars right when we need people to buy them the most. For the first time in decades, Saudi Arabia is openly cheating on the U.S. dollar. For 50 years, the Saudis were married to the dollar. If you wanted their oil, you had to pay in American cash. But now, they are seeing other people. They are accepting other currencies. This is a direct attack on what economists call our exorbitant privilege. Think of it like a magic credit card. America has been able to run up massive debt without ever paying the bill simply because everyone needed our money to buy oil. That magic credit card just got declined. If the world needs fewer dollars to buy oil, they have zero reason to stash US Treasury bonds in their vaults. This shift is not an accident. It lines up perfectly with what China is doing. It is a military strategy known as a Pinsir Movement. Imagine an army being attacked from the front and the back at the same time. China is attacking the dollar from the supply side by dumping its bonds, and they are attacking from the demand side by buying oil in yuan. They are squeezing the US dollar to death from both ends. The impact is already hitting the market. Investors are waking up. They are demanding much higher payments to hold US debt because they realize the scary truth: the US government has no plan. Well, actually, they do have a plan, but it is a bad one. The plan is to borrow new money just to pay the interest on the old money. In the criminal world, we call that a Ponzi scheme. In Washington, they call it fiscal policy. But a Ponzi scheme only works as long as new money keeps coming in. When your biggest investor, China, calls your bluff and walks away, the whole thing starts to unravel. We are already seeing the cracks. We are seeing failed auctions. This is when the US Treasury tries to sell debt and nobody shows up to buy it. The big banks, known as primary dealers, are being forced to step in and buy the unwanted bonds. They are choking on this debt. Their balance sheets are clogged. This creates a liquidity trap. Imagine trying to sell your house, but the front door is nailed shut. You can't get out. In this environment, a sudden shock, like a war in Taiwan, could cause the entire bond market to seize up instantly. And here is the scary part. US Treasuries are the collateral for the whole world. If the Treasury market freezes, the entire global financial system freezes, the ATMs stop working, the credit card machines go dark. The Federal Reserve is terrified of this. They are talking about slowing down their own selling. But that is just putting a Band-Aid on a gunshot wound. It doesn't fix the real problem. The real problem is simple. The US government spends too much money. We relied on our enemies to lend us the cash to do it. Now the enemies have stopped lending, so the spending has to be paid for by inflation. This is a stealth tax. Nobody voted for it, but you are paying for it. You pay it at the gas pump. You pay for it at the grocery store. You pay it when your car insurance doubles. The price of everything must go up to bail out the government. The Chinese government is smart. They are forcing the US to choose between two disasters: hyperinflation or a Great Depression. They are betting that American politicians are weak. They are betting that politicians will always choose inflation to avoid pain today, even if it destroys the country tomorrow. And looking at history, that is a very safe bet. So here is what is going to happen. The Federal Reserve will eventually pivot. They will panic. They will turn the money printers back on. They will give it a fancy name like market functioning support or yield curve control. Do not be fooled. It is just money printing. This will temporarily save the banks, but it will destroy the currency. We are looking at a future where the dollar loses value faster and faster. This is why you see the stock market going up. But be careful. The stock market is not going up because companies are selling more products. It is the Venezuela dynamic. In Venezuela, the stock market went up millions of %. Why? Because the money was worthless. If a loaf of bread costs $1 million, the bakery's stock price looks amazing, but you are still starving. That is what is happening to the S&P 500. It is rising in nominal terms because the dollar is collapsing against real assets. Investors are fleeing cash. They are moving into anything that will hold its value. But the safe asset of the last 40 years, the US Treasury bond, is now the danger zone. The 60-40 portfolio is broken. Stocks and bonds are falling together. China has exposed the glass jaw of the Western financial system. They showed the world that the risk-free rate is actually full of risk. Now, other nations are copying them. The BRICS nations, Brazil, Russia, India, China, South Africa, are building their own club. They are actively building a new payment system to bypass the US dollar entirely. They are hoarding gold at a rate we have never seen before. They are preparing for a new world order, a standard where trade is settled in hard assets, not in paper money printed out of thin air. The US is finding itself isolated. We used to dominate the board. Now we are losing pieces, and the American consumer is the one left holding the bag. Your standard of living was artificially inflated because the dollar was the king. As the king loses his crown, imports get expensive. Your purchasing power evaporates, but there is a way out. 3 specific assets historically survive this kind of currency collapse. I'm going to break them down for you, step by step, so you can position yourself before the panic starts. But first, we have to look at the doom loop that is happening in the housing market right now. We are already seeing it. Go to the store, look at the price of electronics, look at the price of clothes. The China price is dead. For 20 years, cheap Chinese labor kept your cost of living low. That era is over. It has been replaced by the war price. Companies are panic moving their factories. They are leaving China for Vietnam and Mexico. Politicians call it friendshoring. It sounds nice, but it is expensive. We are moving from just-in-time efficiency to just-in-case safety. Safety costs money, massive amounts of money. And guess who pays the bill? You do. This is dangerous. The US economy is 70% shopping. If you stop spending, the economy collapses. Right now, the only reason people are still spending is that they feel rich. Their house went up in value. Their stocks look good. Economists call this the wealth effect. But here is the nightmare scenario. If China crashes the bond market, mortgage rates hit 9%. If rates hit 9%, housing crashes. If housing crashes, the wealth effect vanishes. You stop spending. The economy freezes. This triggers a doom loop. It is the thing that keeps central bankers awake at night. A crash in bonds leads to a crash in real estate. That leads to a recession. A recession means people pay less in taxes. Lower taxes mean the government has a bigger deficit. To pay for the deficit, they have to sell more bonds. But selling more bonds makes the bond price crash again. It is a death spiral, and China is feeding it. Every bond they sell accelerates the crash. It is cold. It is calculated. It is like a medieval siege. They are cutting off the supply of cheap money to the fortress. And inside the fortress, the commanders are lying to you. They are gaslighting the public. They tell you the economy is strong, but the foundation is rotting. Look at the jobs report. They released a great headline number on Friday. Then 2 months later, when nobody's looking, they revise it down. They admit the jobs never existed. Look at GDP growth. It is fake. It is driven entirely by government credit card spending, not by real production. We are borrowing money to buy growth, but the math is broken. For every dollar of new debt we add, we get less than a dollar of growth back. We are spending a dollar to get 50 cents. That is a losing trade. And now that interest rates have tripled, the credit card bill is due. The interest payment on the national debt is growing exponentially. Soon it will consume the entire budget. That means no money for roads, no money for bridges, no schools. Every tax dollar you pay will go to Social Security or interest on the debt. This is the straitjacket China has put us in. There is no wiggle room. If a recession hits now, the government cannot save you. They cannot afford a stimulus check without destroying the dollar completely. We are flying without a parachute. The ground is rushing up to meet us. The bond market is the ground. It is hard. It is unforgiving. And it does not care about your feelings. The bond vigilantes are back, and they want their pound of flesh. That flesh is going to come from your retirement account. The great wealth transfer is not a conspiracy theory. It is simple mechanics. When a government cannot pay its bills with taxes, it pays them with inflation. Inflation is a tax on your savings that you never voted for. You work hard for dollars, you save dollars, but the government prints dollars for free. Every time they print one, the ones in your pocket are worth less. They are diluting your labor. They are stealing your time. China understands this perfectly. That is why they are leaving the casino. They are refusing to hold a currency that is destined to die, and they are not alone. The smartest money in the world is running for the exit. We are witnessing a bank run on the US dollar. It is happening at the highest level. According to the World Gold Council, central banks are buying more gold than they have in 50 years. They are not buying gold because they like shiny rocks. They are buying it because it is the only neutral asset left. In a world of financial warfare, gold is the only money that cannot be frozen by sanctions. It is the only asset that does not rely on a promise from another government. The People's Bank of China is leading the charge. They are taking their trade surplus and converting it into physical bullion. But they are not just buying gold. They are buying something else, something much more practical for the future war economy. And if you want to survive the next 5 years, you need to own it too. They are getting ready for a new world, a post-dollar world. In this world, you don't pay with promises. You pay with things that have actual value. This is basic economics. There is a rule called Gresham's Law. It says bad money drives out good money. Right now, the US dollar is the bad money. We are printing it to infinity. Gold is the good money. And the nations that actually make things, like cars and microchips, are hoarding it. Ignore what the bankers say. Watch what they do. In press conferences, they tell you gold is a barbarous relic. They tell you it's old-fashioned. They tell you to trust the paper money. But then they go back to the vault and stack gold bars faster than ever before. They are lying to you. They are front-running the collapse. They know the old rules are dead. The 60-40 portfolio is a zombie. It's walking dead. For 40 years, bonds were your safety net. If stocks crashed, bonds went up. But in an inflation crisis, that safety net disappears. Stocks and bonds crash at the same time. There is nowhere to hide. We saw a preview of this in 2022. We are about to see the full movie. Holding a US Treasury bond today is not a risk-free return. It is return-free risk. Think about the math. You get paid 5% interest. But inflation is eating 7% of your purchasing power. You are locking in a guaranteed loss. You are paying them to lose your money. So where does the smart money go? When the dollar starts to burn, where do you run? You run to hard assets, things that cannot be printed, things a politician cannot ruin with a signature. Productive farmland, energy pipelines, copper, lithium, gold, these things have real value. They survive because you need them to live. China is doing exactly this. They are on a global shopping spree. They are buying copper mines in Africa. They are buying farmland in South America. They are trading their dying dollars for real dirt and real metal. They are converting paper wealth into real wealth before the music stops. You need to look at your own net worth right now. Be honest. How much of it is real? If all your money is in a bank account or a 401k, you are vulnerable. You are naked. You are the one holding the bag for the government's debt. The everything bubble was built on cheap credit. The everything bust will be caused by expensive credit. It is gravity. If interest rates stay at 6%, stock prices have to come down. The math doesn't work otherwise. You can't have record high stock prices when money is this expensive. A reversion to the mean is coming, and it is going to be painful for anyone passive. This is why billionaires like Zuckerberg and Bezos are selling tech stocks. They are buying land. They are buying gold. They are moving down the risk pyramid. They want to be closer to the base of reality. They know that in this environment, speculative assets get wiped out. You need to become your own central bank. You need to hold reserves outside the system. And here is the most important rule of the next 10 years. If you can't touch it, you don't own it. If you own a gold ETF in your stock portfolio, you do not own gold. You own a piece of paper. You have a promise from a bank. If the system crashes, that bank can just pay you out in worthless cash. They call it force majeure. It is legal and they will do it. China understands this. They are taking physical delivery. They don't leave their gold in London or New York anymore. They bring it home. This is draining the vaults. It is creating a squeeze. Soon we will see a price split. There will be two prices for gold, the paper price you see on TV and the real price you have to pay to get a coin in your hand. The premiums will explode. We are already seeing this in silver. The market is screaming that the paper price is a lie. The same danger applies to housing. Real estate is a hard asset, yes, but it is a hard asset wrapped in a debt bomb. And if you own a home or want to buy one, you are sitting on the front line of this war because the mortgage market is about to freeze. If you own your home free and clear, congratulations. That is a great inflation hedge. But if you have a massive mortgage, that house is a liability. It is a trap. Even if you have a fixed 30-year rate, you have a problem. Your insurance is skyrocketing. Your property taxes are exploding. These are costs that act like a variable rate mortgage you can't control. And it is going to get worse. Local governments are broke. The commercial real estate crash has destroyed their tax revenue. Empty office towers don't pay taxes, so the city has to find money somewhere else. They are coming for you. They are coming for the homeowner. They will raise your property taxes aggressively to fill the hole in their budget. Your home is turning from an asset into a tax farm for the government. It is not the perfect shield it was in the 1970s. You have to be smarter than that. You have to be agile. You need liquidity. But in a crisis, liquidity does not mean cash. Cash is trash. Liquidity means owning assets that anyone, anywhere will accept. Gold is the only asset that is liquid in every country, in every currency, and in every crisis. It is the universal language of value. It requires no translation. It requires no electricity. It works in a blackout. It works in a war. This is why China is buying it. It is their insurance policy. They are building a great wall of gold to protect their economy. You need to do the same thing. Build a wall around your family. Do not wait for the Federal Reserve to give you a signal. They will never tell you to panic. By the time they admit there is a crisis, it will be too late. The gates will be closed. They will try to lock you into the system. This is where the CBDC comes in, central bank digital currency. This is the ultimate trap. It allows them to track every penny you spend. It allows them to stop you from buying gold. It allows them to impose negative interest rates, which basically means they take money out of your account just for saving it. This is the end game. This is financial repression. They need you to stay in the dollar so they can inflate away their debt. If you exit the dollar, you defeat their strategy, so they will try to stop you. But right now, the door is still open. You can still walk through it. You can still convert your digital numbers into real, tangible assets. No penalties, no restrictions, yet. This window will not stay open forever. The $850 billion sell order from China is just the first domino. It will knock over the bond market, then the stock market, then the currency itself. We are watching the death of the old system. The transition will be chaotic. It will be volatile, but wealth is never destroyed. It has just transferred. It moves from the hands of the unprepared to the hands of the prepared. From the oblivious creditor to the smart owner, you have a choice. Will you be the creditor who gets paid in worthless paper? Or will you be the owner who holds the things the world actually needs? China has made its bet. They are betting against the dollar. They are betting on the laws of mathematics. I suggest you look at the math yourself. Do you really want to be on the other side of that bet? The storm is not coming. It is here. It is overhead. The roof is leaking. Build your ark. Load it with hard assets. But knowing what to buy is only half the battle. You need to know when the final collapse will trigger. There is one specific red line indicator that predicts exactly when the Federal Reserve will be forced to print money again. It has predicted every single crash since 2008, and it just flashed red this morning. Click this video right here to see the chart that scares the Fed the most. I'll see you there.